at the first of the year, the 10-year Treasury note touched 3%, and mortgages were pressing up on 5%. And to everyone's, well, nearly everyone's surprise, long-term rates fell really ever since, until about 2 weeks ago. A herky-jerky decline with its ups and downs, but the 10-year T-note all the way down to the 230s. And this week has been straight up. We've touched 260 today, 2.60. Mortgages pressing on 4.5. And a chorus of ouch and woe is me and why. And the Fed's meeting next week. Markets worried that it's going to indicate, give some new indication of when it will begin to raise its rate. The most powerful single force involved is a whole lot of people bought bonds this year. And here came a moment when everybody that wanted one had one. And when somebody began to sell what they had, a lot of other people sold at the same time. At least that's my make on it. I don't think this is a secular change in rates where we're all of a sudden going to blow out the top because the U.S. economy is healed. It hasn't healed. There is no threat of inflation at all. And another piece involved is where we've been back and forth for months is geopolitical risk. And Ukraine is suddenly off the table. The Ukrainians say that the Russians themselves have withdrawn about 70% of their forces from eastern Ukraine. Looks as though Tsar Vladimir's immediate intention was to maintain the illusion of separatist movement in eastern Ukraine and to freeze Ukrainian forces from throwing them out altogether. So that's off the burner for now. There are new sanctions in play. Vladimir, cautiously, politely, I would say, is nuts. It makes it very hard to predict. So could be back in play, but is not now. And the man behind this camera, who's a very bright IT man, asked me on the way in, what about this ISIL stuff? I'm sticking with ISIS. I speak for the markets and actually for my own historical beliefs of the situation. I don't think ISIS is viral. I don't think it's a meaningful threat to the United States. I don't think airstrikes are going to put it out of business. Modest ground troops, 10, 15,000 short term on a raiding basis might get it done, but we're not going to do that. That portion of the Middle East, from Sinai to the Fertile Crescent, to the border of Iran, is a mess. And it's going to stay a mess. And it's beyond the power of the United States to fix it. It's going to roil and tumble. But I think the markets, after thinking about it this week, are much more clear-headed about the threat from ISIS. I mean, these are traders after all. And an occasional beheading of someone happens near their desks all the time. And so they're not quite as flighty as the American people and the president had to respond. But geopolitical risks down, good news. The strength of the dollar from the collapse of everything else is good news, means no inflation. The Fed may do something, but it's not going to do a lot, and so rates are up. Good weekend.